Welcome back, everyone, to another episode of the Ag View Pitch and today's Sunday Market Outlook with Daniel Elsner. Daniel, how are you today?
Doing great, Shay. How are you?
Oh man, it's middle of November, November 15th when we're recording it. Field work is pretty well wrapped up. I know a lot of you listening are at least on the tail end. I think most people have harvest tucked away. And interesting report that we had this week. Lots of decisions being made, and that's why I'm glad to have you on here today.
Yeah, it's a pleasure. Thanks for the invite.
I guess I'd like your initial reaction to the numbers that came out in the report here yesterday. We're recording Saturday the 15th, the report that came out November 14th. Specifically, what are your thoughts about the data? Do we feel that we have updated reflected numbers, or are we lacking there?
I think we're lacking, and the USDA basically said that. If you go to the website and pull up the WASD, it says right there at the top, there's a big note that says that due to the lack of government funding and the shutdown, they essentially didn't have all of their normal resources to pull off of when compiling the report. So I don't think they had all of their tools that they typically use. So I think it's going to throw into question, how good the numbers are. Um, so I think that's certainly something that
I would say that's probably going to piss some people off though, because they expect USDA to have the right numbers. This is what a lot of the trade is surrounded by. How does that strike you for the impacts that this has at the farm gate for farm operations, making marketing decisions here at the end of 25? We're headed into South American production, and there's a lot of uncertainty right now.
Yeah, for sure. I think it just throws a huge wrench into things. I mean, this market was trending higher on both corn and beans, and we basically erased all of our gains from this past week. Now, that being said, we're still in a solid uptrend. We'll see what the market does here to open up the week. But it seems like it was rushed, and probably, you could have waited another couple weeks or another month to put together a more compiled report that had all of the data sources that they typically use, and I think the market would have trusted that a little bit more and would have reacted better, just to the quality of data, regardless of what the numbers said.
So when you think about farm operations out there, we have people that were heavily sold coming into 25. We have people that had almost nothing sold. We have people that are still sitting at low amounts sold. Who's the which I guess defined character there that I just highlighted concerns you the most, especially with, in light of recent events with this report and the uncertainty as we head into the next 2 months here?
Yeah, I think those that don't have anything sold need to seriously look at making sales and seeing what levels are profitable and make sense for them, just because there's so much risk in this market. And now that you have the government coming out with reports on a weekly basis with exports and the WASD and all these other reports, I think there's going to be a lot of risk in this thing, especially on the beans. And I think you're just going to have a lot more volatility. So I think just being disciplined, especially if you have nothing sold, it is probably a prudent idea at this point in time.
Now, some of the traders out there I know are excited to have a little bit more volatility back into the game. We've been in such a narrow trading range. Corn seems to like 420 here over the last couple of months. It seems like on the D's 25 contract. Is that volatility good for farmers? How do they manage that? Because we went from a narrow trading range where we knew we didn't like the price to now it's like, well, we're getting these 10, 12, 15 cent moves. Still not ideal, but there's a lot more emotion involved there.
And the emotion is the key thing. I mean, volatility is good for the farmer if it goes up, but you also need to stay disciplined too, because how many times do we see where the farmer will see that the market's rallying a lot and then they hold back, they don't want to sell anything, their price targets keep getting bumped up. So I think if you're a farmer and you see we move 10, 15 cents higher, I mean, seriously take a look at, where do I need to be in terms of making a sale, and what makes sense for my operation, and not just letting it ride and hoping we go to $5 or $12 on beans. And just staying disciplined, I think, is really important in volatile times. And having offers in the system, whether it's a cash offer at your local end user or a future offer on the board, just staying disciplined with those. And if you like a price, put an offer in. And if it hits, don't be too upset that it hits because you like that price when you put it in.
And don't pull the targets when they're 2 cents away.
Mhm.
Maintain that discipline. Um, it's kind of interesting as we sit here again, November 15th. There's corn that's been sitting in the bins for 2 months, and I think that's the other part of the equation that people need to seriously consider here. That storage, we factor anywhere from 3 to 5 cents per month per bushel on corn and a little bit higher on soybeans. Those are real dollars that are being burned essentially every day to the equivalent interest or opportunity cost, depending on your operation. So the question that I have here was based around a discussion on X last night of people saying, "Oh, well, go figure. They kept the yields high. They're gonna come back and have a remediation." And this happened in 2019, and then they got caught with their pants down with the derecho, and they couldn't cover it up. I'm not into the whole conspiracy thing. I think the people that are there do as good of a job as they can with the numbers that they have. But if that's the case, and if farmers are sitting there and saying, "Oh, this thing isn't as big as they thought it was going to be," there's options. I mean, there's opportunities. You can sell the cash. You can have re-ownership. There's different option strategies that are out there. I mean, is it the lack of education on the options that exist, or is it people just not feeling comfortable with taking that assumed risk? They'd rather just talk about it than assume the actual risk of what they believe.
Yeah, I think that a little bit of both. There's certainly a lot more education that could be done. And when I talk to farmers, a lot of them, some of them don't even know what an HTA is. And a lot of them are traditional cash sellers. They go to the local elevator. But there's a lot of opportunity out there and a lot of different tools in the toolbox that you can use. And they're not all for everyone. But I think at least playing the futures and basis game and splitting up that cash sale into those two components is really crucial to maximizing your farm's profit operations. And there's other tools on top of that too. I mean, there's stuff you can do on the board. There's options. There's over-the-counter tools that you can use with your local processor. Different accumulators and things like that too, where you can get a premium price to where it's at today. And like I said, it's not for everyone, but there's certainly a lot of tools out there for the farmer to use. It's just a matter of wanting to go and learn about it and ask about it.
And if you're listening to this and you know that you're that person that doesn't have the knowledge or isn't educated and doesn't quite understand, just call up your grain merchandiser and ask them. Call up your local elevator. Call up, someone in the industry that you feel that you could have that conversation with and say, what options are available? What's the cost to me as a producer? How does it fit into my logistics of my operation? And then what makes sense moving forward? You hit on something there. Transparently, I've not been paying attention very much to kind of the carry situation.
Mhm.
Can you talk about carry in the market that exists today from Deese as we roll into the beginning of 2026 delivery months and what your thoughts are there?
Yeah, the carry is right about at the cost of carry that you talked about. It's about 4 to 5 cents a month on corn, and I think 6, 7 cents on beans. So if you're long cash corn and you're holding it in the bin, you're really hoping for either a basis rally or a futures rally because cash to cash, you're better off just selling it now versus holding it into the future months with where the board's at today. So you need to be bullish basis or futures for it to make sense to even carry. And we've seen with this bean rally, the carries just eroded away.
Hmm.
There used to be pretty good carry on the board for old crop beans, and it's really narrowed up. And you're seeing that narrowing on the corn side too. The spreads continue to narrow from Dees to March. I know we're getting into Dees delivery here, so it's going to be less relevant. But either way, the carries have been narrowing and tightening up and being taken out of the market. So it makes it a harder case to hold the corn now, hold the corn out to the summer or the spring instead of just selling it now, unless you do have, a bullish bias to the market. But if that's the case, I think you need to sit down and think about what numbers do you want to execute at and stay disciplined. That way, if we do get some volatility to the upside, you don't let it slip away.
I'm going to make a comment and then I'm going to have a question. personally, I'm not exactly bullish futures right now. When we look down the road here, and part of that is because, South America is going to be coming online here soon enough with the delay in the report, the government shutdown. And now you have crops that are, growing or going to be actively planted here over the next few months in South America. I've seen several people online say, hey, carry out only goes up from here, pending any South American issue. So let's assume my bias here, and then I'll let you give some feedback on that. But does that just leave basis for us to be bullish on? And if so, your Cedar Rapids, Iowa area, how do you feel about basis? What's your outlook? Is the crop there or is it not there?
Hmm. Yeah, in terms of my local dry, I think the crop's there. We're certainly off of last year, but last year was a record crop.
Hmm.
So instead of seeing 280 yields, you're seeing 240s, 250s, which is still a good crop. But I know from the farmer perspective, they're disappointed because of what they've had last year. But in the grand scheme of things, it's a good crop, and I think the corn is there. You also had acre increases from last year too. So locally, I think we're probably about the same as last year. Um, and with the basis question, I think there's some risk here from the farmer going out into the spring because you have a lot of people holding as much as they can in the fall with how bad prices were, at least on corn. I mean, we've seen a bean rally now, um, but on corn, they're not wanting to let go, especially off the combine. So you're going to see a flood of grain, I think, after the first of the year that needs to move for cash flow or logistical reasons. Um, you've had a lot of people bagging too, so that has a timeline on it. They don't want to hold that into the summer. So I think since they're holding the corn back in the fall, it's just going to have to move even more after the first of the year. So I think that's something that the farmer needs to keep in mind in terms of basis is when is grain going to move? Because if you're looking to move grain, your neighbors are probably looking to move grain. So I think that's something to keep in mind there for sure.
So what I'm not going to put words in your mouth. I'll ask it as a question. We might already seen peak basis opportunities during the harvest timeline, or maybe in the next 30 days. Maybe after that, it trails off.
Yeah, I think after the first of the year, it's going to be hard to be too bullish on basis just because I think there's going to be a lot of grain that needs to move. Now, out into the summer, who knows? But in terms of the next few months, in terms of marketing opportunities, I just don't know how strong basis can get here, just because there's a lot of corn that I think needs to move.
Hmm. I appreciate the perspective on that. Now we'll go back to my comment because I want your opportunity to
Mm-hmm.
uh, question on that. So, personally, I don't have I'm not super bearish either at this point, but I don't necessarily have a huge bullish outlook on futures here, either for 25, current crop, or as we move into 26. What are your thoughts?
Yeah, so if that's the case, fundamentally, if the numbers are saying, bearish or neutral on grain, I would say look where the charts are. I like looking at trends and technical analysis, and the trend is higher. We're still in a solid uptrend from our August lows, both in corn and beans. Um, Now we did have a very large rally here, especially on the bean side of things, on this China deal. So you have a lot of risk there in terms of it pulling out. But um, if you're bearish or neutral, I'd say take advantage of an uptrend. And if we continue to go higher, just stay disciplined in terms of making sales. Let's say you go up 10 cents on corn, make a sale, go up another 10 cents, make a sale, something simple like that, just to stay disciplined. I think makes sense if you're not overly bullish personally, but if the trend gives you the opportunity, I think making sure you're pulling the trigger on some sales makes sense.
And just to reiterate, those sales, we always encourage people to think about it as a percent of your production as opposed to,
Mm-hmm.
a contract of 5,000 bushels or a couple thousand bushels or a load at a time. Look at how many sales do I legitimately want to make in my operation. For me, the fewer sales, the better. If I can make 6 sales on any given marketing year, and I feel comfortable about the price levels that we're at, that's more of a target on my end to where it's less to manage. I'm more disciplined with my approach. I know what my targets are going to be. I think sometimes we see people get into trouble when they say, yeah, I'll make a sale, like Daniel said, at every 10 cents, but I'm going to sell 2,000 bushels and I'm producing 400,000.
Mm-hmm.
You need 200 sales, and you're probably not going to go up 200 times 10 cents. So Just kind of an interesting perspective there. I got a couple charts here on the screen.
Hmm.
Just kind of looking for your reaction on this, I guess. So the current one is Dees 26, which is the blue in the background, overlaid with Dees 25. And I think it's been interesting, kind of that spread that we've held there as 2025 has, it dipped down 390, upper 380s there, and then you tack basis onto that. We are kind of ugly there 3, 4 months back. Now it seems we've regained a little bit of that strength, tapped up around 440 here a couple days ago and settled back in that 430 range. Anything that you would comment just as we're kind of looking, we're blending here between 2025 and 2026, but does anything strike you about this chart that you think is interesting?
Yeah, I think D's 26 is really strong compared to where D's 25 was. I mean, at this 470 level, you're basically within the top 10 cents of where D's 25 traded
Hmm.
last year. And I know it's not a seasonal, quote, seasonal time to sell next year's crop, but if you're looking at it year over year, at this 470 level on the Dees board, I mean, that's getting you 450, 440 corn, cash corn at a lot of different locations across the country for bushels that you're going to have to move at harvest. That's a lot better than sub $4 corn that we saw this year. So I think it would, if the numbers make sense for you, it makes sense to think about making a sale there out on D's 26 at these levels. And locking in, at least those bushels you need to move at harvest, because that way you're locking in something that's 40, 50 cents better than it was this year. And then that makes it easier to make marketing decisions going down the road.
Hmm.
Um, and going back earlier in the conversation, and there's tools that can get you closer to $5 on the D's 26 board, in terms of options or accumulators and things like that. Now, there's tools to even get a premium on that 470 price. So I definitely think this is a place for farmers to seriously consider getting at least a base layer on for next year, just comparing it to what we've seen this past year.
And on top of just the logistics piece that you mentioned there about, the bushels that you can't hold during harvest or as you kind of get through the whole 2026 harvest season, as we're talking about, is look at those variable costs or fixed costs, depending on your operation, and say, what expenses do I want to make sure that I have covered or protected? I know I'm going to have that cash flow coming in. And as I've had people asking me, marketing questions here over the last few weeks, that's been kind of my response of let's get your variable cost covered. You're going to buy fertilizer, you're going to buy nitrogen, you're going to buy seed, you're going to buy crop protection. Take whatever dollar amount estimates that you have and look at doing an equivalent amount of sales. It doesn't mean you have to go out if your variable costs are 40% of your expense in your operation. I'm not saying you have to go out and be 40% sold, but let's have a mark to market or let's have a target here for that crop year and say, what do I want to make sure that I have covered? And that gets you started. That gets you headed in the right direction. And for a lot of our operations, that 450 to 460, and then you also mentioned some of the, accumulator contracts that have premium opportunities to get those bushels bought. There's there's opportunity not only for break even, but actually pretty decent profitability, even with increased input prices there. So I appreciate your perspective on that. And I guess as I look at it from the work that we do in AgView Solutions with Profit Manager, figure out what your variable costs are, figure out what you want to make sure that you have covered, and maybe use that as a preliminary target. Any other thoughts there?
No, I totally agree on that.
Okay. So the other chart that I have here, I just overlaid kind of some retracements here. And again, this is looking at DECE of 2026, sitting here around 467 today that I marked it at. Really, what I wanted to show, this is a year-to-date chart going back to January 3rd or January 6th, something like that. If you were to market DECE 26 today, you're in the top 20% sales of what this trading period has given you the opportunity for over the last, call it 10 and a half months here. To me, if I can be a top 20% marketer, and who knows what the next year is going to bring for this contract, but if I can be a top 20% marketer or top 20, 30% marketer year over year, that's going to line me up for some success. And the question I've posed to people, and I'll pose this to you, is, am I missing out on too much upside potential by doing that? I know I'm very heavy forward sold. That's just kind of that's my marketing strategy. How do you think about that risk of maybe missing out on some of that top end potential versus, 80 out of 100 days we're going to be trading lower than where we are now?
What I'd say to that, I think it's better to lock in break even, lock in profit, hopefully on a first set of sales than try to chase it to the upside. And if you look at the chart, I mean, we're on the higher end of what it's traded the last year. That 470 mark was pretty heavy resistance. We ticked above it on Thursday. I think 473 or so is what we got on the high. And even on the summer highs, it's 475 or 479. So you're really getting to the higher end of where this contract has traded over the last year. And in terms of risk management, I think there's going to be resistance there, and it makes sense to lay off some risks there. Now you could break above and make a run higher, maybe closer to $5, but as a farmer, unless you're retiring, you're always going to have grain to sell. You're always going to be long grain. So just knowing that, I think it makes sense to lock something in at a level that makes sense for you, and knowing that you might have 80-90% of your crop left to sell. So if we do get a run higher, there's your upside participation. And if for some reason you are heavily marketed, maybe in your case, Shay, or other folks, and you see the market start to rally, I mean, it's not advice, but you can always, do some kind of reownership too, as well. And then you also have the next year's crop to market too. So,
Bingo.
farmers are always going to be long grain.
You're,
Um,
you're speaking my love language. If it rallies as we head into the next marketing year, I'm just going to sell the year after that.
mhm.
I'm the minority here, so I understand that. But I like to offer that as a perspective because I know there's people that listen that you had referenced earlier that they only do the cash sales or they only do what makes sense for their operation. And there's a lot of well, let's look at soybeans here. We're going to go to soybeans next. I don't have a 25 chart, but the people that put soybeans in a bin and did nothing and sat on their hands are the ones that, look pretty smart now that we had a
Mhm.
over $1 move there. I think it goes both ways, but I think just being consistent in whatever you do. This is Nove of 26, looking somewhere in that, above $11. And you look at least well over $1 from what we saw in those low tens here over the last year. There's opportunity there. And I've had a lot of people calling and asking me about Nove 26 on soybeans. What are your thoughts there?
Yeah, layering sales above $11. I think that makes a lot of sense. You don't need to do everything at once. I said layer it in, so you could do something simple like I talked about earlier. If you're above 11, make a sale. Goes up 15 cents, make another sale. I mean, you can tailor that to your operation too, and what makes sense. But I think anything above $11, we should at least be doing something. I'm not saying sell everything, but at least get that base layer on for what you need to move at harvest. Because this past year, I mean, basis one was terrible, but futures wise, you're in the low tens. I mean, we're basically a buck 20 higher than what we were at harvest time. So I don't know why you wouldn't really lock any, at least a starting layer up at above $11. And I've been working with a lot of farmers to do that. And I mean, there's pricing tools on that where you can probably get close to 1150 on the board using some of those contracts. So I think it makes a lot of sense here on soybeans to do something.
All
And
right.
if you're not doing something, ask yourself why. What's the goal?
Absolutely. All right. So final kind of question point in relation to what you were saying. So the chart that I have up here is D's 26 corn overlaid with Nove of 26 soybeans. And obviously it's adjusted based on the charts there. Your comment about resistance in that, call it 470 to 480 range as you look in D's 26, part of that is due to the current crop production, maybe some uncertainty in numbers, but we know it's probably a big crop. The question here is South America. What's that look like? Is there any weather events as we move forward? And then really what's planted acreage look like? So this is my way too early acreage question. But as we look at a profitability comparison, we're still seeing soybeans for a lot of guys below cost of production, even at this above $11 range. A lot of our operations were sitting at 1140, 1180 area. Are we looking at, hey, we had a good year of corn. We like to grow corn. We know we have some margin in corn. Let's grow more corn next year. And what are the implications of that? So, any thoughts around that, Daniel?
Yeah, so the D's corn and the Nove beans, the ratio is about 2.4 now. I mean, typically you want to see that above 2.5 to incentivize soybeans over corn. And yeah, who wants to plant something where you can't make a profit today on it if you forward sold? I understand that. But we did that last year too. So at some point, the rotation's going to need to come back into play. I mean, some people do corn on corn forever, but for a lot of people that doesn't work. So I think you are just going to have rotation pressure in terms of more bean acres than what people would like to see, just because of the corn on corn increase that we saw this past year. So I think that rotation is going to catch up to them. And I mean, that ratio is at 2.4. If that goes up 2.5, 2.6, I think it makes a lot more sense for people to start, planting beans over corn.
And aren't we looking at like 170 out of Brazil for soybeans? That sounds bearish to me on
Yeah,
soybeans.
I mean they're going to continue to raise acres and raise yield. I mean they're just going to keep growing their supply in South America. So
Key considerations here as we look at Nove 26 on soybeans, starting to see some levels of opportunity as we head into next year here. I think the basis discussion was important. I think looking at where your interest and storage cost is going to be is important. We talked a little bit about future opportunities on corn. Daniel, any final thoughts here as we wrap up?
yeah, I think what you guys preach at Profit Manager, just know your numbers, know your costs, and if the board gives you an opportunity, or if you have the chance to make a cash sale at those times where markets are usually the weakest, harvest time, uh, definitely don't be afraid to put something on at break even or profitable levels, especially for those bushels that you need to move at harvest, because what we see a lot is farmers are undersold. They are forced to move a lot of grain at harvest at really bad prices. And then it makes it harder for them to make future marketing decisions because they want to average up. So it makes it harder for them to take advantage of, say a 50-cent rally in corn when for them they think they need a dollar rally to make up for those sales that they made out of the field at low prices. So if you lock in your worst sales at break even profitable levels, it makes it a whole lot easier, and it gives you a lot more staying power in the market to maybe catch some more upside potential and just increase the overall profitability of your operation. I know it's not the seasonal time to do it, but if the numbers make sense, I think definitely it makes sense to do something and have offers in, have numbers in that you're looking to sell at, and don't be afraid to put an offer out there and execute on it.
Yeah, great words of wisdom. As we wrap up here, Daniel, thanks for joining us here for the second week in November Sunday Market Outlook. If folks want to get a hold of you, like what you had to say, is there a good place for them to contact you?
Yeah, Daniel Elsner at rocketmail.com is my email.
Very
Reach
good.
out there.
Thank you so much, Daniel. And thank you, everyone, for listening to another episode of the AgView Pitch Sunday Market Outlook. We will catch you next time.